Hello, folks. Bill and Brian here for our weekly update. Listen, we are live and we are excited to be here. And I can't tell you how excited I am to be here because I have been relocating all this last week. And today I don't have a cardboard box in my hand and I'm feeling great.
I wish there was a visual cue telling me where you relocated to or
A
around.
visual cue. I don't know. Well, maybe what I
How
need to
would
do
I
is
get there?
maybe I would put up a sign or something.
That's a good idea. I like that. I like that idea. So,
Well, listen,
um,
we're glad you're here today. We're going to talk about really some of the basic fundamentals of energy commodity trading. And it's a lot of times people forget that it's not just one thing. That's going to, Brian, I'm going to say that over and over again. It's not just one thing. If you're looking at one thing as the reason a price went up or went down, or supply went up or went down, or production went up, went down, or demand went up or went down, and you're looking at one thing, you will never be right.
right,
Promise.
right, right.
So, but what we've done is that I say we, it's the we, like I have a mouse in my pocket. It's actually Brian has worked on this really hard. And to put together just a presentation, which we shared with our premium group today. And so they actually have this presentation already in their hands or in their computers. And it's talking about what we can, or actually how, what you should be looking for to be able to do your commodity trading. And, sometimes we think we've got it all figured out. And then we go, oh, wait, somebody thought about this. And so you have to know, well, every now and then you have to do something out of the ordinary.
She gets kicked by a mule, they go back to normal.
So, Brian, hey, bud, it's good to be back.
Hey, I'm glad you're back. I'm sure everybody else is glad you're back too. They got tired of listening to just me. Because I'm boring. I have the personality of an accountant. Sorry, accountants. I have a master's in accounting. So,
Well,
anyway, what we're going to talk about today, we're going to talk about mastering fundamentals in energy trading. So, energy trading is by its very nature incredibly volatile. And by incredibly volatile, it can be 5 times as volatile as equity markets, sometimes 10 times as volatile as equity markets. A big move in the equity markets on S&P 500 might be at 2%. A big move on energy commodities can be upwards of 20%. So you have a lot of volatility. There are a lot of things at play. And because of the volatility, there's opportunity. And so what we're going to do is we're going to cover a bit about mastering the fundamentals and what building blocks you should take a look at when you are approaching energy trading, whether it be from a long-term perspective or a short-term perspective.
you mean
So
It's like in chess. First, you strategically position your pieces, then when the timing's right, you...
strike.
Right.
That's exactly it. So a lot of times people approach commodity trading because they're attracted to the volatility. And what you have to look at is that you have to understand various components. There's going to be supply, demand, imports, exports, storage, and how all these trends are lining up together. So you have to understand supply dynamics. You have to understand production levels, because the commodity supply side, it starts with production. And so
So,
what
for those of you folks who are new to the energy business, when we say production, it's not like manufacturing. Production is actually the amount of the commodity that each well produces. And these levels are reported. And so when you say production, it's not a manufacturing like, oh, they have inventory. To us, inventory is storage. Production is not factory levels, even though it can be that. It is very weather dependent. It's like having your factory outside all the time. And so that's what we mean by production.
so what they typically do on natural resources is they establish some type of drilling apparatus and they drill a hole into the ground. And the shale revolution really happened because of horizontal drilling, not vertical. This is the vertical and this is the horizontal. So they drill into the ground and it's called directional drilling. And that, because they're doing that, they're capturing all this resource and then pulling it out either through natural pressure or through mechanical pressure or other mechanisms. So understanding the production levels, the production trends, the reserves, the extraction methods, all come into play when you're looking at the supply dynamics. Then you look at what are some factors influencing supply? You have geopolitical events, technological advancement, regulatory changes. There are a lot of rules that are coming down in terms of methane emissions that are really going to change how upstream supply operations are going to happen and how power plants are going to happen. Then you have technological advances such as the electric vehicles, and then you have geopolitical events that can disrupt or enhance or provide scarcity or abundance on supply. And scarcity, for example, Europe started relying on US LNG heavy after they started the Ukraine war, right, Bill?
No, that's right. Now, the other thing here, when you talk about technological advancements, a lot of that is one in the actual drilling of the well, and two is the actual production of the well. So, on the drilling of the well, when we were able to turn and go 90 degrees horizontal, that was a huge change in recoverable reserves. And so, and we'll talk about recoverable reserves at another date, but what that basically means is how much we can get out.
Right.
And at what cost we can get it out at. But the oil and gas business has been doing technological advances since they first started doing cable tool rigs. And some people don't even know what those are. And unfortunately, I've actually even worked on one. So those technological advances can be in the mechanics. It can be in the type of machinery we use to pull it out. And so the technological advances move all along the chain of production, even to the point of refrigerating natural gas and shipping it overseas. That was a technological advancement.
Yeah. And that all factors into the supply side, the demand side as well.
Right.
And then understanding what happens, what's the impact of supply disruptions. You have price volatility, trading strategies, and risk management. With this volatility that the commodity markets have, it provides opportunity, but it also provides risk. So you have to balance your risk and put the odds back in your favor anytime that you're looking at an impact of supply disruptions. And then you have to flip to the other side and say, what's happening on the demand side? Some key drivers, on natural gas are going to be power plant needs. On natural gas, there's going to be weather and industrial processes. Then you have on crude oil, what's happening in the refined products markets, the diesel markets, regular gasoline markets, the fuel to plastics. So how are these demand factors going to influence pricing, and how can you forecast trends? And this is part of the reason that you can't, on energy commodities, only look at technical analysis, and you can't only look at fundamental analysis. You have to look at both.
So the biggest thing when you're looking at volatility is understanding that, once again, it's never just one thing. It's multiple things and how they trade off one another. And so, and we can go into longer details on that. What would they need to do for us to do that, Brian?
Wait, what? What was the question?
What would they need to do for us to expand on the depth of that some? I think probably they need to go to Rogue Premium and sign up.
So, my name is Brian, and this is my partner, Bill, and we have a service that we provide perspective on the energy markets, and we provide a service called Rogue Edge. And then for those that are a little bit more serious, Rogue Premium, Rogue Edge provides you supply, demand, imports, exports, storage stocks, technical analysis for natural gas, crude oil, refined products, NGLs, electricity, and more. So you have at your fingertips a platform that has over 150 charts. You get a daily email, weekly video recaps with a weekly PDF, daily support and resistance. Then, for those that are really serious, for Rogue Premium, which is $179 a month, you get access to our private Discord channel. You get in-week video updates, Q&A with us, both of us. You can meet with us, and if there's a lot of activity on our Discord every single day. So you can also save if you want to come to our annual plan, but we would love to see you. A lot of times, a lot of people believe that they can find all this information. Yes, you can. It's going to take you a lot of time. We've centralized this to make it easy for you, accessible, and this gives you a sample of what shows up in your email inbox every day. And this is a sample of the weekly report that you get at the beginning of the week for both Rogue Edge and Rogue Premium. And then,
Brian, I don't think you're sharing that.
oh, I'm not. Yeah. So, so you get access to this daily email, this weekly PDF. So there's a lot in here for only $89 a month. And then Rogue Premium is $179 a month. And you can save a little money on the annual plan. Right, Bill?
And we call it Rogue Edge because it gives you an edge off the competition, because while you are looking at our data, being able to capture all that data, your competitors are struggling to keep up. So you don't ever want to end up being like this.
3 blocks away, Schwartz was getting his.
Yeah, but we would love to see inside. If you're serious about energy commodities, please consider us as an alternative. There are other services out there. Many of them cost thousands of dollars a month, and we wanted to make this as affordable as possible. So let's get back
Picking back up where we were before I interrupted you with a commercial.
No, commercial is valid. And feel free to ask us questions along the way. So you also need to look at the demand side for, you need to look in depth. For instance, in natural gas, you got to look deep on power. What's happening in the renewables market? What's happening in the coal markets? What's the impact of weather? What's the impact of industrial consumption? Then,
and in natural gas, now you have to look at exports.
Yes. Yes, you do. As a matter of fact, that's one of the things that we talk about frequently, especially in our community, is taking a look at the export trends. And if you look on, this is just one of the 150 charts that you can take a look at. From 2017, we went from 2 BCF to over 14 BCF. We've now since dropped to 12.9. If you want to ask why, well, there's two reasons. Freeport, and there are some demand concerns coming from Europe and Asia. If you want to learn a little bit more about that, we would love to see you inside, because this is what we live for. This is what we talk about all the time. So
all the time.
In addition to supply, in addition to demand, you have to look at the importance of the storage facilities. They are truly the balance of the market. They provide the market equilibrium. They manage the inventory levels and have utilization rates. And now you have to put everything together. You have to look at what's the indicator for capacity, inventory, and utilization rates. What is our total capacity for the U.S.? And we were just talking about that this morning. Let me see if I can pull this up. Bill, why don't you talk about these while I see if I can pull this up.
So when you talk about storage, understand that storage is in different locations, and in our nation, most of our storage is down south. At least a large amount of it is. And so for it to get to the market area, which we consider the Midwest and the Northeast, it takes time, and so that has to be planned. And so that's why storage is important, and it's usually sort of a leading indicator as much as possible.
And on the storage side, we actually just shared this with our community and have an active model where we take a look at production, consumption, and what the forecast is for storage for the rest of the year. So we look at the injection season and the withdrawal season. So if you're interested in things like this, join us. It's only $89 a month, $179 if you want a little bit more interaction. Now you have to look at the aspects of exports, imports. What are the influencing factors there? And this is where you can look at, for example, I'm going to stay on the natural gas example. Natural gas, we are exporting 12.9 BCF on a day on LNG, 6 BCF on to Mexico, but we're importing about, yep, but we're importing about 5 BCF a day from Canada. Now, what you have to do is pull back and say the United States is expanding some LNG for, exports. Mexico is building their own exports. Canada is going to have a very large one coming on. I think later this year. It might drift into early 25. But
yeah, I think it's going to be first quarter 25.
But what that could do is that could decrease our imports from Canada and increase our exports to Mexico and increase our exports out of the United States. So,
and once again, these imports and exports, they affect the areas in which they come into. So like the exports on LNG basically comes out of the Gulf Coast. You see a lot of that impact really in the Gulf Coast area and in Permian. Same thing with Mexico. A lot of that's coming out of the Houston Ship Channel and Permian going south to Mexico. Actually, the imports for Canada is hitting the Midwest and hitting the Northeast. And so it's not just understanding what the math is, pluses and minuses, but understanding where the pluses and minuses are.
right.
And that location is important to understand as well.
Well, and that's that's one reason that we take a look at actually these prices right here that show up on our show up on Natural Gas Financial. This is our basis map where we track JKM, TTF. JKM is Japan, Korea. TTF is in the Netherlands, stands for Title Transfer Facility. So these are export prices, but it's not the value in the Gulf of Mexico. I just put them there because I didn't want to make the globe map. So shame
Hey,
on
Brian,
me.
do you trust me?
I don't know. Do I?
Yeah, repeat after me. Hi, Robert.
Hi,
Robert's
Robert.
watching.
Hi, Robert. Hey, Robert. So yeah, I guess I trust you. I trust Robert probably more than you.
Well,
So
that's not a bad thing.
So when you're looking at fundamentals and when you're trying to correlate this to price, you have to track supply, you have to track demand, you have to track trends on supply, trends on demand. You have to look at storage, you have to look at exports, you have to look at imports. Then you have to explore exports a little bit further and take a look at the volumes, tariffs, trade deals, geopolitical tensions. You have to look at things like Biden's pause on LNG facilities. What does that truly mean? That came up in conversation yesterday in a meeting that I had. So all these things do matter, and they will matter. So listen, harnessing the knowledge and really understanding what's happening on the supply side, what's happening on the demand side, storage, exports, imports, geopolitical tension, all of this, weather. You have to look at trends on all of these. And part of the reason that we created Energy Rogue is so that you could easily identify trends. And one of the trends that we track all the time is what is happening in each basin on their uh, supply and demand trends. And we take a look at we take a look at new production, less production to see, are we growing or are we declining? Because a lot of people look at the net number not realizing, well, it really comes down to how much new production do we have? How much decline do we have? And if you don't understand decline, it basically means that what you have each month, it gets less and less and less because there's less pressure from the out of the ground pushing the molecule up. And hey, Giorgio, nice to see you. You're always here, so great to see you.
So I think, Brian, the best way to describe decline is that case of beer in the refrigerator. It never gets more when you leave it in there. It just seems to always decline.
Seems to always dissipate a little bit. But the key takeaways that we really want to cover, we're going to try and keep this to about 30 minutes. We are opening up for questions. So if you have any questions, shoot them to us because we're going to be here till every question is answered. On the closing remarks, the key takeaways are it's going to be important to track supply, demand, storage, exports, imports, understanding the fundamentals, and then going back and taking a look at the technicals, because those two markets really drive what direction the price is going to go. And then you apply those insights and then you continuously learn. As a matter of fact, in our Discord community, one of our members was discussing storage containment risks. So we were talking about the possibility of what happens if there are storage containment risks. What are those? What do they mean? So this is part of the continuous learning because it helps you understand those markets so much better.
So it's interesting, Brian, it's interesting to use that term, harnessing knowledge. A lot of people don't understand that word anymore because we don't have horse and wagons anymore. So when you talk about harnessing knowledge, when you put a harness on a horse or mule or an ox, you don't change the strength of the animal. You focus its power into a task. And that's what we try to do here. We're not trying to diminish your knowledge. We're trying to help you use your knowledge and focus that knowledge on coming up with the arbitrages and the correlations and the trends that help you understand the market.
Right. Well, and because if you look at just one variable, for example, production, and you stop there, it's going to lead you down the wrong way. So let's say Giorgio has a question. Do you foresee a further positive bullish effect for of rising prices on oil majors? Ooh. Okay. So I'm going to go I'm going to state my opinion and then I'll let Bill weigh in. So for oil majors, there you have to think about a lot of different things. You can't just correlate a high commodity price on crude oil or natural gas and translate that to the oil majors, because the oil majors are in production. They're also in refining. They're also in refined products. They're also in service stations. They pull their income from so many different places that it's a little bit more muddled. There's a higher correlation. Or not higher, a very high correlation to the economic input. That said, when you correlate crude prices to oil majors, yeah, it's pretty high, significant correlation. But when you translate the math down, technically, technically the correlation is stronger than it should be, because they're getting their income from other places. But I do see positive, in my opinion only. We're not financial advisors. We don't claim to be one. If you want to fall asleep or learn about our disclaimer, you can click the link below. But I am bullish on equities. I'm bullish on commodities. And the reason why is because I'm bearish on the US dollar. So I think that there's going to be some monetary movements that are going to provide an upward momentum on both on commodity prices as well as equities. I'm more so believing in the commodity prices than the equities. I think equities are generally overpriced, but I think that they will be pulled up. So that's my 2 cents. How about you, Bill?
Well, I was going to tell you, Giorgio, I think I agree with Brian that the majors have multiple incomes from revenue sources, and that the commodity prices are more emotionally attached to them than they are physically attached to them. But what I would say is that your tier two companies probably have a higher direct correlation to those commodity prices than the majors. And so while your tier two companies are still public companies, they're not the majors and that's why the majors did that. That's how they got to be called majors, is because they had gone all across the spectrum.
Right.
And so I would say that it's going to be more directly tied to that. They're going to, and so, but what that means is the closer they're tied to that price, the closer that that volatility level is going to be in their equity price as well.
Right. Now, Georgia, we don't make independent stock recommendations because we're not financial advisors. We're not allowed to. I will share a personal strategy of mine, which is when I'm looking at a industry segment. This is an investing strategy that has served me well over the past, which is when I look at an industry segment, I usually take a certain portion of what I consider high performers in that segment and I buy a basket. I buy equal portions of each. So it doesn't mean that you're going to be right or wrong on any particular one. But if you are a strong believer in the industry segment and you believe that the industry segment on oil majors is going to continue in an upward fashion, building your own portfolio, you can't go wrong with that. It's going to reduce your risk. It does mitigate a little bit of upside because if one outperforms the other. So this is just my personal feeling, not a financial advisor. There are disclaimers. So I wouldn't recommend one over the other. My personal opinion, I would probably buy equal portions. So that's my
Georgia, you asked that question in Oklahoma, they're going to think about asking what gas station you go to fill up your car. And of course, I'm always with the independents as opposed to the majors because I always go buy either Quick Trip or OnQ, which is serviced by the independent refineries. But when you go look at it all, what you should buy, we are not that type of trader. We're not going to sit there and say, hey, we're not going to give you stock recommendations or anything like that. What we will tell you is show you the things to look at. And if you're going by someone's recommendation as opposed to doing your own research and looking at their financials, looking at their annual reports,
Yeah.
looking at the same things we just talked to look at in the market, that's what you need to do. And then be able to make your own decision, because just about all the time, the clues for what the company's doing is inside those annual meetings, especially in the notes.
Right. It definitely read through the notes. And another thing, Giorgio, if it fits for you, you can join our Rogue Premium, because we do talk about individual investments, and we share that not as recommendations, but just as a group. So you can
Mostly
join it.
whining and complaining, but yeah, we share it.
Well, but we also discuss strategies and whatnot. So Giorgio,
Right, exactly.
I hope that helps. Wasn't trying to dodge the question, but I also want to stay true, because we're not financial advisors. So, so for your recapping subscription options, we have Rogue Edge, Rogue Premium, and we do have Advantage plans. And these are plans that are more customized and tailored to you and your interests and your company, that may have a very specific need, such as wanting some of these charts branded for your company. We do that type of thing in a Powered by Energy Rogue. We also do some training programs, and we provide custom insights for several companies and individuals. So that's probably getting us close to wrapping up.
Yeah, I think so. Is there any more questions? And by the way, folks, we're always developing this, and we want you to be a part of that. So that's why we like you to join the community, because a lot of things that we've added in the last year has come because of the community participation.
Right. And the key to remember when you're looking at fundamentals, don't look only at fundamentals, look at technicals as well, but look at supply, demand, exports, imports, storage, technical analysis, money flows, intermarket analysis, equity markets, international markets. You got to look at it all. So there is a lot there, and we'd love to hear from you. You can also reach out to us. You can email us at rogue@energyrogue.com. We'd be happy to talk with you. So that's pretty much it for today. Want to thank you. If you learned anything, drop us a like, drop us a comment. That stuff really helps. Share it. We would love to get our message out, and we're going to continue to provide some education materials on the market, and hopefully this will help you on your journey. So any closing
And
thoughts, Bill?
if you want this presentation, email us at rogueenergy.com, and we'll see what we can do to get it to you or get you out there.
Yep.
So listen, folks, it's been we really enjoy this, to be honest with you. If we didn't enjoy it, we wouldn't do it. I promise you that. Brian are at that point where we do what we like. And so call us, connect, let's get together, because we want you to go rogue with Rogue Energy.
Yep. So listen, folks, thanks so much. Thanks for dropping by. And again, let us know how we're doing. Let us know if there's something else that you want to hear about. And so we'd love to hear from you. Hope you have a fantastic rest of your Wednesday. Have a good one. All right. That one good.
And we'll get